Hi, my name's Will,
And I'm Ed.
and we work on the official's benchmark publication. We publish fair value curves across a diverse basket of energy commodities at the close of Singapore and the close of Europe each day. We provide commentary on key market forces shaping today's price discovery. Read more at flux.live and check out our Atomics officials. So ahead of the OPEC meeting on Monday, we thought it would be useful to have a bit of a discussion on OPEC quotas and recent compliance that we've been seeing over there, and what we might expect coming into Monday, what we're hearing in the
Yep.
rumours. So super simple, Ed. What is the reason behind OPEC quotas and reduce their self-imposed supply reductions?
So the reason that OPEC gives for cutting back on production is essentially to what they like stabilize the market,
Yeah.
make sure the market is kind of what they refer to as healthy and sustainable. Really, they want higher prices. Their producers, obviously, they naturally want to sell their crude for more, and so it's kind of a supply and demand balancing act, really. And they've been for a few years now cutting back on their output. So they have some idle capacity that hasn't been used for a while in order to help prop up the market in that way.
Yes, and the key thing here is it's all about that price setting power, right? So when you're producing a big portion of global demand, you have what's called the marginal barrel. You have a bit more control over the price. When other non-OPEC producers start to take larger and larger shares of global production, naturally that price setting power, that marginal barrel becomes diminished. So recently we have seen a little bit of a shift in OPEC. Would you agree? In terms of, once again, they're starting to be a little bit more aggressive with their cut and winds. We just saw Saudi come out yesterday, leaking some to Reuters, saying that they're okay with low oil prices. They can sustain the prices.
Yeah, because there's been a lot of discussion about the Saudis wanting, say, $100 per barrel or $90 per barrel to fund their budget, because naturally these countries are countries that rely on oil production as a major source of their revenue, particularly the poorer ones, so the likes of Iraq or Kazakhstan or Algeria, for instance. Oil revenue is crucial to all of these countries' budgets, and there is an increasing sense of urgency with these. Yeah, we've seen, for instance, ADNOC has released $1.5 billion worth of bonds in the last week or so.
And obviously, ADNOC, UAE, Saudi, they have pretty good credit ratings as far as the OPEC group go. Their debt issuances are usually pretty sought after. Now, if you go look at Kazakhstan or Iraq, even their debt issuance is going to be a little bit more ropey. They're going to have to pay a little bit more interest on debt they take out. It's not as easy for them to cut back production and then fund their fiscal obligations through debt issuance. So while Saudi can remain compliant as they have from our data, you get situations with, so Iraq is currently pumping at about 4.8 million barrels per day. Their quota is 4,050,000.
Yeah, well, we can see the required production on the screen now is for these 8 countries that gave you additional voluntary cuts, who then revised their production schedule and their expected production, their quota. You can see on the screen you've got Iraq 4.05, near enough, million barrels per day. So if they're producing, like you say, that's hundreds of thousands per day more than they should be. Whereas you've got
almost 800 kbd overproduction just from Iraq.
Exactly. And then you've got similar kind of thing with it, UAE even as well.
I mean, the interesting thing as well is that OPEC will impose compensatory cuts. So it's kind of a bit of a hand slap to those that have been overproducing. And we can see that on this chart
that's on the next chart here. So those who overproduced have to compensate for that by reducing their production now, as a compensation for previous overproduction. But the question really is, are these countries going to actually follow through on that compensation?
So we saw in the case of Iraq, for May they got a 50 kbd cut unwind. Their quota went from 4 million to 4,050,000. At the same time, they got a 140 kbd compensatory additional cut. The last OPEC meeting, we got a total unwind of 400 KBD, and we can see there for May, the compensatory cuts are 378. So really, that's only a 22 KBD unwind. So I think that's going to be really the interesting point next meeting on Monday is going to be what's going to happen to the compensation schedule. Are we going to see any adjustment there?
Yeah, it's really the Saudis who would be given, with this announcement from May, the right to produce more, because they've got 160,000 barrels additional production according to this new accelerated schedule. And from what we're hearing, there are increasing noises of unhappiness among the Saudis, of resentment towards those who have been less compliant with the cuts. So they might want to do a bit of a shock and awe tactic, show who's boss again, and get the others back in line.
I mean, it is easier for the Saudis to be compliant. Right?
Yes,
you know, their supply chain, their upstream is controlled by Aramco, right? So in the case of Iraq and Kazakhstan, it's not quite so clear cut. A lot of the upstream capacity is maintained by IOCs that have binding contractual obligations for the delivery. And if OPEC come in and say, actually, no, you can't deliver that cargo, well, the IOC is not going to be happy about that. They're probably not going to listen.
Well, you end up with a situation like Kazakhstan, where the energy minister comes out and says, national interests come before OPEC discipline. Exactly. And then he gets a slap on the wrist and has to eat humble pie and say, actually, we're very committed to OPEC and compensation cuts. But
it was the same. It was the same with the Russians. I remember, you know, every month they'd have a new compensation cut, which they pledged to honor in the next month, and then it would just be rolled off and rolled on.
Just defer it constantly, push it off.
So I mean, we'll see what comes out of the compensation schedule, whether there's any adjustments there. But I mean, the rumors that I'm hearing, I don't know if you're hearing the same, is that it's going to be a bit of a shock. And last time we saw that, we saw a pretty aggressive move in the Saudi OSPs, didn't we?
They came down harder than we expected.
Make room for the market. So we'll be having the meeting on the 5th, and then we expect Saudi OSPs to come out on the 6th. Mechanically, as we discussed in the last video, looking at the Dubai structure month on month, it would imply about a 25 cents hike. That would bring the Saudi light OSP into Asia up to $1.45 a barrel. We think they're probably going to be a little bit kinder, especially if they're going to be releasing more supply that wasn't necessarily entirely priced this month. We would expect a hike more in the region of 15 to 20 cents per barrel.
Yeah, I think it is important that you mention how the market's been pricing these accelerations, because the previous announcement back at the beginning of April to increase production from May, that was completely unexpected. I think very few people were awaiting that, were expecting the OPEC to come out and announce that. Whereas this month, I think with the Saudis having hinted to these reporters and to these companies that they might be able to weather the storm of lower prices, I think there's more expectation for the barrels to return. But
and I mean,
it could still affect the market.
One clear aspect of that is been the Dubai physical premium in recent sessions, and kind of the past week or so, we've really seen an aggressive move down there. But I would add that the Saudis set their OSPs based on averages, right? It's average over the month. So when you get a bit of news like this right at the end of the month, that mechanically implied OSP probably won't actually capture where the market is pricing. It won't capture. And that's when you get the little discretionary adjustments, as we saw last month, and probably as we're going to see this month, with a slightly softer hike than mechanically implied.
Yeah, and so I think this also comes on to the question of how this will affect crude markets globally in terms of the differential between, say, Dubai crude and Brent. Because if you've got OPEC expected to release more supply, to be pumping more, that should loosen the Dubai market, which has been pretty tight recently. The medium sour grades have been pretty tight in their supply and demand balance. Whereas the Brent structure, the lighter, sweeter crudes from the Atlantic, the North Sea, should come under a bit of pressure, I think. Because
Yeah, I completely agree. I think, as we were discussing yesterday, there's outage in Ecofisk in
yeah,
July. I think only
in June,
in June, only one cargo booked out of 12. So I mean, yeah, the tightness, a bit more tightness among light sweets, most likely, and then yeah, a big loosening of the medium sours. I mean, the tightness in medium sours that kind of came off the back of the Totsa play in January is only really just starting to dissipate. We had Vitol bidding aggressively in the window for the past 2 months.
Yeah.
They came under a lot of pressure at the end of the month as news started to come out about OPEC supply release, and the premiums started to really get hammered. And yeah, Vitol probably took a bit of a beating there, but yeah, now the barrels are most likely coming back online. I'd see there's definitely upside potential in the Brent Dubai differential.
I would also like to add the role of Midland in this dynamic, because obviously we've got China can no longer buy Midland. It's economically and financially unviable, right? With the tariff that's added so much to your cost of buying that barrel, it becomes unrealistic.
I mean, even like a 10%
exactly,
would
even
close
that would kill,
like,
right? And then you've got other countries like particularly India or Korea, Japan, offering to buy more Midland.
Yeah.
Naturally, that will pull on the Midland supply, which has helped liquidity in the light sweet crude market.
Yeah.
And then you've got China, who, if they want to run a light sweet crude, they suddenly have to go to North Sea crudes or WAF.
Yeah.
So that should put some pressure on both sides, really, on the Midland side and the North Sea side. So I think there is plenty of scope for a rally in Brent.
Yeah, for sure. I mean, China's refinery complex is built on the medium sours, but naturally they will mix that with a small amount of light sweet, depending on yield and depending on what they want to produce. So I mean, yeah, naturally going for your other North Sea grades, your 40s, your Brent Nina, Ecofisk, Osberg, Troll.
Yeah, the North Sea complex. Yeah.
Exactly. Or some of those lighter, sweeter WAF grades. It looks like that is probably the move that's going to happen.
Okay, I think that's all we've got for today. So in that case, thank you for watching, and stay tuned and subscribe to see the next episode that we'll be publishing next week. And also, with regards to this OPEC meeting on Monday, make sure to go and follow us on Twitter, because we'll cover it there in detail. And also in our reports, we'll be giving our view and analysis on whatever they announce. So make sure you stay in touch, and see you in the next video.